Everyone believes that XRP has had its time, that the run has already taken place, that the story is over. However, what if that assumption is the reason the real move hasn't begun yet? The market doesn't reward what's clear. They praise things that aren't understood, aren't paid attention to, or are built quietly while everyone is busy. And XRP is sitting in that pocket right now. Be quiet, thought less of, packed. At first glance, Ripple seems to be quiet. That's what makes people confused. No hype loops that never end, no meme craze, no talks that go on and on about setting price goals. Behind closed doors, only infrastructure, rules, and positions are being worked on. Also, most people don't want to hear this unpleasant truth. Big moves in history never begin when everyone is thrilled. They begin when things are dull, annoying, and moving slowly. That's where we are now. If you really want to know what's going on instead of responding too late, I made the XRP Insiders Elite just for times like these. What I do is break down positioning, timing, and real signs there. It's in the video description if you want to know more while other people stay confused. Let us now talk about why XRP's silence is important. Ripple has been around for more than 10 years without being priced by the public market. That is a very important point that not many people talk about. The public markets price stories, hopes, and feelings every 3 months. That process has never been used on Ripple. It's run through strategic agreements, private funding rounds, private valuations, and deals with banks, institutions, and governments that are kept secret. That means one thing: that is not how XRP has ever been fully priced on Wall Street. A lot of people think that the price of XRP already shows how successful Ripple is, but this is wrong. You cannot set a price for something you have not seen. You can't model something that isn't known, and it's not possible to properly measure an ecosystem if the main company has never been seen by the public. That changes right away with an IPO. Wall Street will look at more than just the stock number. When Ripple goes public, they break everything down: XRP exposure, strategic holdings, subsidiaries, licensing deals, revenue sources, cash flows, and yes, exposure to XRP. Not from a speculation point of view, but from the point of view of the balance sheet and the infrastructure. Then standard finance will look at XRP as more than just another token. It will be seen as a strategic asset linked to a real company with real power. This is where time is very important. Many people think that delays mean doubt or weakness, but in the capital markets, delays often mean that you have control. When things are crazy, you don't ring the bell. When regulations are clearer, liquidity is getting better, and institutions are ready to confidently spend capital, you ring it. That's not fear, that is accuracy. Wall Street doesn't put money on things it doesn't fully understand. Structure is what it waits for. There is a wait for answers. It waits for paperwork, compliance, and the matching of rules and regulations. Price activity will stay quiet until then. Liquidity slowly grows. Positions are slowly added up, not by people buying green candles, but by capital that gets in early and gets out late. That's why XRP seems to be behind other investments that are going up. It's not behind. This is loading. And this isn't just a story anymore. The quiet part is being said out loud by even traditional experts. Once the value of Ripple is made clear, big gains are predicted. That wording is important. That's not just social media BS. That's how institutions frame things. There is a link between the two. First, make the valuation clear. The price answer came next. Now let's talk about usefulness, as this is where the story goes from being hypothetical to being based on facts. Most people still think of XRP as a payment coin that can be used for quick trades, low fees, and sending money across borders. That story isn't wrong, but it's out of date. It's no longer just for payments. The XRP ledger is now being used for institutional grade loans at the protocol level, not DeFi projects that are a mess, not yield farms that can't last. In-person loans, set terms, rates that never change, risk models that businesses can understand. Very few people are paying attention to this huge change. Pumps are not chased by institutions. Their goals are to get yield, reliability, and compliance. In times of stress, they want methods that always act the same way. Lending based on validators and isolating risk is not crypto cosplay. That's the logic of traditional banking being rebuilt on the blockchain. As soon as these frameworks are approved by validators, XRP will no longer be seen as a speculative currency, but as a part of the financial system. The market also has to reprice an object when it moves from one category to another. That's when you start to see smart money acting differently from how regular people feel. While the market as a whole is falling apart and fear rules the news, capital is slowly moving around. The fact that XRP is getting tens of millions of dollars while Bitcoin and Ethereum are losing money is not a coincidence. No one gives out that much money by chance. That's placement on purpose. Stores are waiting for approval. Institutions take a stand before approval. In the past, XRP has always moved at the end of the cycle. Bitcoin is the first. Ethereum comes next. The alts turn. After that, XRP takes cash from everything that has already run. However, it doesn't slowly come in when that happens. It's quick, because there aren't as many options that haven't already grown by the time XRP moves. That's why its moves are sharp, violent, and make people who waited too long feel lost. Add this behavior on top of real adoption. Over $15 billion has already been handled through on-demand liquidity in just 1 year. The APAC routes are taking over. There are dozens of live payment paths, and many of Ripple's partners aren't just testing messaging tools, they're actually using XRP. That is the difference between building things and putting them together. The size of the global payments market is in the hundreds of trillions of dollars. XRP doesn't have to be the leader. It only needs to get worse. Every new corridor, small rise in volume, and new institution puts more stress on the same fixed supply asset. The infrastructure starts up slowly, price responds afterward. That's why tomorrow isn't just about one light. It has to do with placement before things become clear. The IPO rush, lending by institutions, smart money comes in, real amount of money paid, survival under regulation is already checked off. These are the things that come before repricing events, not after them. This will be clear to most people before they understand it, but the benefit is lost by then. It's easy to see why most people miss these times. Price, not form, is what they're taught to look at. Price is very loud, structure is not noisy. Price makes us feel things, structure makes things inevitable. XRP is one of the few assets on the market where the structure is getting stronger while the price stays the same right now. There will be no more disconnects. Take a step back and talk about rules, because this part of the story quietly took away the biggest risk without making the price go through the roof. XRP lived in the shadow of the law for years. That cloud was about more than just Ripple. It had to do with whether or not institutions could touch the stock without risk. Compliance departments don't guess. They leave if they don't know what will happen. That's exactly what took place. It wasn't by accident that the liquidity stayed low. Check out what's different now. The safety test set by regulators has been passed. In the United States, XRP is one of the few large cap digital assets that is really easy to understand legally. That should have been enough to cause a huge price drop. But here's the catch. Clear regulations don't lead to quick pumps. It causes selection to be delayed. Institutions don't trust what's in the news. They make changes to the models, keep the rules up to date, and wait for liquidity gaps. The public can't see that process because it is slow and precise. Retailers were upset about prices in the short term, but equipment kept running. Payment rails got longer, partnerships got stronger. The corridors that were first used as test beds turned into production lines. The most important thing is that XRP was still used. One thing that doesn't change over time is usage. Based on data that is stored on the blockchain, most of the action on the XRP ledger is not trading for speculation. It's money due. In crypto, that doesn't happen very often. Internal token exchanges, arbitrage, and farming are the main things that happen on most chains. The way XRP is used makes it look more like a utility network than a casino. That's important because utility-driven traffic acts differently when the market is stressed. It doesn't go away right away. This is why emerging economies are so important to the story of XRP. There is no such thing as an adoption in New York or London. It starts where there is the most pain. Payments across borders, unstable currencies, problems with sending money back home, and places where the current system doesn't work well. When countries start making crypto laws clear, it won't be about gambling anymore. It's about how well it works. The price of crypto won't change when countries with tens of millions of people approve and use it. That sets the stage for years of growth. And volume is what causes repricing in the end. Narratives don't matter to markets. They can't ignore flow that keeps going. Moving on to the ETF point of view, as this is where things start to change people's minds. ETFs aren't about making people crazy. It has to do with access. They give capital that isn't supposed to be buying spot crypto a way to get exposure through well-known shells. There are regulated vehicles needed for pension funds, retirement accounts, and business portfolios. When steady money starts to flow into ETFs when the market as a whole is falling, that's a sign, not a chance. The fact that XRP-related goods are getting money while other assets are losing, it tells you something important. It is not momentum that is being used to make allocation choices, but asymmetry. Asymmetry is when the downside seems limited compared to the gain. That's how organizations really think. This is related to what big wealth managers have been saying in public. When leaders at companies that manage trillions of dollars talk about digitizing traditional assets and moving markets to blockchain, they're not just making stuff up. They're talking about a process of change. Take in first, step two, integrate, last to dominate. For that process to work, the infrastructure needs to be able to handle real traffic, real compliance, and real settlement speed. This is where most crypto projects fail. They should work, but when they get big, they break. From the start, XRP was made to be used by a lot of people. That is not advertising. That's the truth of architecture. Plenty of work to do, not expensive, ending that you can guess. Institutional traders are very interested in those traits, but individual traders are not. And this is the part that makes people feel bad. Not all assets will be around if crypto really does become a part of the world financial system. Many are already there. Many are too slow, too expensive, or not stable enough. The winners won't be chosen by how people feel on Twitter. They will be chosen based on which rails can safely move value while being watched by regulators. This is why XRP's steady growth is more important than its short-term fluctuations. It shows up over and over. It saves the processing power. It keeps adding more passageways. It doesn't try to destroy old systems. Instead, it keeps merging with them. In real life, that's how old systems are replaced. That's not revolutionary talk. Supply patterns is another part that people get wrong. XRP doesn't need a supply shock based on a story. It needs to meet practical needs. When XRP is used as a bridge asset, it doesn't just sit there. The loops, the more traffic that moves through it, the more liquidity is needed to keep it moving. That makes a base demand that doesn't depend on how the market is feeling. This demand profile will change again when institutional lending systems go live. You can't just move XRP around anymore. You have to hold on to it to make money or make credit easier to get. There's been a big change. When it comes to valuation, assets that have reliable returns are worth more than assets that depend on speculation. This is why the market isn't right now. A lot of people are scared. I'm not sure of myself, but the way things are placed tells a different story. Quiet inputs, improvements to the structure, alignment of regulations, and rising usage. These are the signs that show up before big price changes, not after. A lot of people wait to see what price says. The chance has already shrunk by the time price talks loudly. It always feels bad in the beginning. It feels slow all the time. Things never seem to be going anywhere. That's what you get for being early. The story of XRP has never been about beating the hype. It's about making it through long enough to matter. Now, all the pieces are coming together at the same time for the first time. On the horizon are rules, infrastructure, interest from institutions, global adoption, loans, exchange-traded funds, ETFs, and access to the public market. Nothing goes off at the exact moment that it has to. It blows up when the market finally catches up to what was going to happen anyway. This is not advice about money. This is the part that most people find hard to accept. When new information comes out, markets don't change. They move when they can't stay in one place any longer. The unevenness is gone by the time clarity is clear. That's why the last few weeks before a big repricing always feel slow, tense, and annoying. Right now, XRP is right in the middle of that phase. Think about how stories usually go around. First, an asset is ignored, then it's made fun of, then it's called into question, and then all of a sudden it's clear and everyone says they saw it coming. Every single one of those steps has been lived by XRP. What makes this time different is that there are no more excuses. Now, it's not, what if rules kill it? It didn't happen. What if banks don't use it? They're already there. It's not the same anymore. What if it's just hype? The data doesn't back that up. There is no longer any doubt. It's not believing. And the last mental barrier before repricing is disbelief. The market is still stuck on old points of view. People remember the cycles that came before, the lawsuits, the unmet promises, and the long periods of moving in a circle. Anchoring bias is a strong thing. It makes people think that tomorrow will be the same as today. Infrastructure assets, on the other hand, don't act like memes or companies. That is, they act like systems. First slowly, then all at once. There is a movement of trust going on below the surface. Instead of putting your faith in weak, uncertain structures, put your faith in tracks that can actually move value when pressured. You don't see that in a one-day candle. It shows up when corridors stay busy during downturns, when institutions allocate during fear, when governments choose clarity over prohibition, and when asset managers plan goods years before they are needed. This is another reason why volatility reduction is important. If an object doesn't change much for a long time, that doesn't mean it's dead. They mean that power is being saved. It doesn't ask for permission to return volatility after reduction. It grows quickly because the placement is off. There are not enough people who are ready to sell at old prices and too many people who are waiting. The way XRP's liquidity works is very sensitive to this change. Flows don't spread out among dozens of options when they get bigger. They get closer. That's what makes the moves XRP has made in the past seem crazy now. They don't make no sense. It's a structural release of demand that has been building up. Another thing that people don't think about enough is story fatigue. The market is sick of stories that say they will upset but only cause problems. It's sick of environments that can't grow, follow the rules, or work with the real world. People are paying more attention to things that don't need to be explained anymore as they get tired of that. Things that just work. There's already a story about XRP. The old one has to finish unfolding first. The main thing that finance is still used for is making payments. Still, problems across borders cost billions of dollars. There are still problems in settlements. Mismatches in liquidity still lead to chaos. Spelling hasn't helped with any of that. It is fixed by plumbers. XRP is like plumbing, and you can't see plumbing until it breaks or someone changes something that did. The time of change is always soft. Old systems don't just fall apart overnight. They are patched, added in, and then slowly taken away. Crypto doesn't take over money. It takes it in. It's what leaders mean when they say they're digitizing things and moving markets to the blockchain. It's not a revolt. Moving is happening. That's why the question isn't, will XRP move? When will the market finally accept what is already there? And acceptance generally comes all of a sudden, caused by something small at the time, such as a filing, a start, a policy change, or a liquidity event. The result is already happening when the cause is being talked about. Tomorrow doesn't have to be a big deal for it to be important. Reset points don't usually make themselves known. They only become clear after the fact. What seems like just another day is often the day that things slowly change. The day weak hands stop leaving. The day when patient capital stops building up. Now for the hard facts. Most people won't believe this until it costs too much to not. They are going to wait for word. They'll wait for news stories. They'll wait until other people agree with them. But getting proof costs a lot. Soon, social proof will show up. News stories are written after the fact. The people who get the most out of these times aren't the ones who can guess exact dates or lights. They know enough about organization to stay put even when things are boring, uncertain, or noisy. That's always had the real edge. XRP doesn't need to be perfect. It doesn't have to win every story. The only thing it needs to do is keep going until the rest of the world comes up. That's exactly what's going on. That's the point, if this makes you feel bad. Chances don't always feel good at the time they happen. It's lonely. It doesn't feel sure. It looks like you could be wrong. But when structure, law, adoption, and capital all start to line up at the same time, it's often discomfort that sends the message, not danger. Now is not the time to call a top or a bottom. It has to do with figuring out when an asset has quietly moved from being a matter of speculation to being important to the economy as a whole. When that line is passed, price is no longer a matter of possibility, but of when it will happen. Time always works in the favor of those who are already there. That's exactly why I made the XRP Insiders Elite, so you can get a better idea of how to place yourself as this plays out. Others only react, while others do real research and plan. It's mentioned in the video description.